Hi, I'm Mark King, Investment Editor at Columbia Threadneedle Investments, and here's what's in my column. Well, as we move into 2018, equity markets remain at all-time highs, and that's following the outperformance in 2017 that saw Wall Street enjoy one of its finest years for some time. The Dow Jones Index closed out the year at 24,735 points, its highest ever level, and this was echoed by the S&P 500 and the Nasdaq Index. US stocks rallied on the back of strong corporate earnings and jobs data, as well as that robust consumer confidence we saw throughout the year. Investors also believe that President Trump's tax reform bill would pass through Congress reasonably intact, and this confidence was borne out as the tax bill was passed on the 20th of December, with cuts in corporation tax that should benefit US companies. In the UK, the FTSE 100 index ended the year at a high of 7,687 points, while in Europe, markets were subdued as political risk continued to unsettle investors. Catalan separatists declared independence from Spain following an unofficial referendum, and Germany ended the year without a government. Italy must hold an election in the early part of 2018, which may also have worried European investors. But overall, stock markets were much less volatile in 2017 than they were in 2016, when the world was rocked by events such as the Brexit vote and the election of President Trump. But in 2017, markets were far more settled, as investors worried less about global political risk and valuation levels, and global growth kicked in. In the UK, consumers saw inflation rise in 2017 as the fall in the value of the pound, related to Brexit of course, fed through into higher import costs for companies. And this put something of a squeeze on household spending, exacerbated by high levels of borrowing caused by years of ultra-low interest rates. However, in December, the rate of inflation fell from 3.1% to 3%, perhaps indicating the sterling-related effect has now passed through. So what of 2018? Well, you'll have to take a look at this week's column to see what we believe might be the key features of the current year. See you next time.